We're in the early moments of 2026, and humanity, well, it feels like we're standing on a knife's edge. I mean, we are living through this age of just incredible technological speed. But the feeling in the air, it's not triumph, is it? It's tension. There are these three massive forces gathering strength, almost like storm systems circling the global economy. And the scary part? They're starting to converge.
And really, that's the central question, isn't it? We have these amazing tools that could solve our biggest problems. So why does everything feel so uncertain? More uncertain than ever, maybe. To get our heads around this, we've got to look at these storms one by one. Each one is a major force all on its own.
All right, first up, we've got a force of pure creation, artificial intelligence. You've seen the headlines. It's this technological supercycle that's promising a whole new era of growth and productivity. But all that power, that breakneck speed, well, it's kicking up its own kind of turbulence.
Then there's the second force, a force of division. You know, while all this new tech is supposedly building the future, old-world conflicts are flaring up again. We're seeing new trade disputes drawing fresh battle lines across the map, and it's threatening to crack the very foundations of our global system.
And finally, the third storm, a force of pure confusion. There's this high-stakes battle raging over the actual rules that run our markets. It's blurring the line between finance and gambling, and it makes you wonder, who's actually in control here, if anyone?
So what happens when you mix all that together? You get fear, a real, palpable sense of fear in the markets. Investors are getting defensive, they're pulling back from risk. You can actually measure this shift in sentiment. To really get why, let's zoom in on the first and maybe the most powerful of these storms.
Now, this first storm, it's not a threat in the way you might think. It's more like a force of nature. The AI boom is completely rewriting the rules of the game for economic growth, but its raw, untamed power is creating some very unique and very volatile weather patterns of its own.
I mean, look at this number. $8 trillion. That's the projected funding for global AI infrastructure in just the next 4 years. That isn't just an investment, folks. That's a fundamental rewiring of money on a global scale. We're talking a figure that rivals the entire economy of major countries.
So where's all that cash going? It's being poured into the very bedrock of our digital world, semiconductors. This relentless AI-driven demand is creating a massive, multi-year supercycle of growth. It might even shatter the industry's old boom and bust cycle for good.
And this is a historic tipping point. Seriously, for the first time ever, right now in 2026, data processing, we're talking the silicon brains inside data centers and AI models, is set to make up more than half of all semiconductor revenue. The reason? An absolutely insatiable demand for the GPUs, memory, and chips that make the AI revolution possible.
What this has created is something that looks like a perfect growth machine. Think about it. Investment in AI companies leads to huge hardware orders. Those massive orders signal incredible demand, which in turn justifies the sky-high valuations of these AI startups. And those valuations, they make it even easier to raise more money to buy more hardware. It's a perfect loop. Or is it?
And that right there is the trillion-dollar question that's haunting every boardroom and trading floor. Is all this spending actually building the real, durable infrastructure of the future, or is it just a frenzy, a transient bubble fueled by hype and a massive case of FOMO? The answer might be hiding in a pretty controversial new trend.
They're called circular AI deals. Here's how it works. The tech giants buy billions in GPUs. Then they rent that computing power to AI startups. And how do the startups pay for it? Often with the venture capital they just raised. So in a way, the whole ecosystem is funding itself. And that brings us to the critical point of failure. If that fire hose of venture funding slows down even a little, the entire engine could just seize. And that internal weakness is now slamming into a very different, very external kind of threat.
So while Silicon Valley is busy building this new world, the old world, with all its long-standing conflicts, is making a major comeback. It's reasserting itself with some dramatic consequences for the global economy, reminding all of us that physical reality can still bring digital ambitions to a screeching halt.
Right now, the epicenter of this risk is Iran. You've got this convergence of escalating tensions and internal unrest, and it has the oil markets on super high alert. Traders are already pricing in what they call a risk premium, basically a buffer, because they're afraid any disruption there could have immediate cascading effects around the world.
And here's exactly why that fear is so potent. The Strait of Hormuz. This tiny little waterway is one of the most critical economic choke points on the entire planet.
Any interference with shipping here doesn't just hurt the local players, it sends violent shockwaves through the entire global supply chain.
I mean, the numbers here really tell the story. 30%, a third of all seaborne crude oil passes through this one strait, a fifth of the world's liquefied natural gas, and almost a quarter of global aluminum exports. This is not just an oil story, folks. It's a commodities superhighway, and the constant threat of it closing is forcing everyone to brace for some wild price swings.
This kind of volatility creates two completely different futures. In one scenario, let's call it oil on the boil, supply disruptions push crude over $70 a barrel, and that reignites inflation. In the other scenario, a global slowdown and some de-escalation could send prices tumbling below $50. The huge gap between those two outcomes, that's just pure, raw uncertainty.
But this friction, it's not just confined to conflict zones. After a Supreme Court ruling threw a wrench in previous tariffs, the U.S. administration hit back with a temporary 10% surcharge on all imports. It was a sudden, blunt move, and it brings the ghost of a trade war roaring back to life, creating chaos for global businesses, which leads us right into our third, and maybe most unpredictable storm.
Okay, this third storm is different. It's not about tech, it's not about territory. It's about words, over definitions. It's a fundamental fight over the nature of risk, of finance, and of regulation, and it's being fought in courtrooms all across America. This quote from a Hawaii state representative just nails the heart of the conflict. Are these fast-growing platforms like Kalshi and Polymarket innovative financial exchanges? Or are they, as he puts it, basically gambling but with another name and through a loophole?
The whole fight really boils down to this. On one side, the platforms claim they offer event derivatives. These are basically financial contracts that pay out depending on a real-world event. They argue this puts them under the exclusive federal control of the Commodity Futures Trading Commission, the CFTC. But on the other side, states are calling foul. They see unlicensed gambling that dodges state taxes, age limits, and really important consumer protections.
And we're not talking about a minor disagreement here. This is a full-blown legal war. I mean, we're looking at nearly 50 active court cases right now. That creates this messy patchwork of conflicting rulings and just intense uncertainty for an industry that's already seeing billions in trading volume.
And the federal regulator, the CFTC, has drawn a very clear line in the sand. They've publicly stated they will defend their exclusive jurisdiction. What this does is set up a direct and, frankly, unprecedented showdown between federal and state power over the entire future of finance.
And that gets to the wider impact on all of us. As Professor John Holden points out, this fight is really a symptom of a much bigger trend, one where the lines that used to separate investing, finance, and just outright betting have become, well, almost invisible.
So you've got different federal courts issuing totally contradictory rulings. This legal chaos is on a collision course with the Supreme Court. It might be the only institution left that can draw a final line in the sand and settle this jurisdictional battle once and for all.
Okay, so this brings us to the very heart of it, because these three storms we've been talking about, the AI boom, the geopolitical friction, the regulatory chaos, they aren't separate weather systems anymore. Here in early 2026, they are merging into a single, incredibly complex front.
Remember that risk-off feeling we talked about at the beginning? Well, this is what it looks like. Key indicators of market mood have swung firmly into bearish territory. And this isn't a reaction to just one thing. It's a reaction to everything, all at once.
And here's the key takeaway. You can't analyze these forces in a vacuum anymore. A flare-up in the Strait of Hormuz now directly affects how much it costs an AI startup in Silicon Valley to get funding. A court ruling on prediction markets suddenly influences global investor confidence. It's all connected.
The fear in the market is now being fed by a cocktail of factors from every single storm. You've got slowing economic growth, oil price spikes from that geopolitical risk, real worries about the AI bubble we talked about, and the deep uncertainty from both trade fights and that regulatory firestorm. They're all pieces of the same puzzle now.
And what this creates is a really dangerous feedback loop. Here's an example. The fear that AI stocks are in a bubble, that gets a whole lot worse when high oil prices threaten to bring back inflation, because inflation could force central banks to raise interest rates, which would choke off the very money that's fueling the AI boom in the first place. See? One storm's wind is now making another storm even more destructive.
So what does this all mean? I mean, how are we supposed to make sense of a world where it feels like everything is happening at once and every risk is tied to another?
Well, this is the new reality. 2026 isn't just another year. It feels like the dawn of an era that's going to be defined by this fundamental collision. The most powerful technological innovation in history is happening against a backdrop of the most complex and interconnected instability we've ever seen.
And that leaves us with one final urgent question. As all these forces keep converging and getting stronger, they can't all hold their energy forever. Something has to give. The question is, what breaks first?